Hello everyone. In this video we are going to discuss the Pakistan budget for the year 2023, the facts and figures, and some significant changes made in taxation. If you like this video, please like it and subscribe to my channel. Pakistan is a rising market economy in the Asia-Pacific region, faces unique challenges compared to the experienced developed nations. The country's geopolitical situation, challenging financial environment, and high inflationary pressures have significantly affected global growth prospects. These factors also pose substantial economic risks for Pakistan. Furthermore, devastating floods and political unrest have further worsened the situation. In 2022, Pakistan's economy witnessed a high growth rate of 6.1%, however, it was unsustainable as it was largely driven by domestic demand and ended up with a high fiscal and current account deficit. From July to April in the financial year 2023, CPI inflation stood at 28.2%, significantly higher than the 11.0% recorded in the same period the previous year. Various factors have contributed to this inflation, including adjustments in power and gas costs, a significant rise in food prices, currency depreciation, soaring global fuel and commodity prices, and recent devastating floods. To counter inflationary pressures, the State Bank of Pakistan raised the policy rate by 725 basis points in the past year. Let's review some highlights of the budget 2023-24. The total outlay of the federal budget is Rs 14,461 billion, which is 30.40% more than the size of the budget, revised, estimates of last year. The projected interest payment is estimated at Rs 7,303 billion, which is 32.30% higher than the figures of Rs 5,520 billion in the revised budget. The current expenditure of the country is estimated at Rs 13,320 billion compared to Rs 10,528 billion a year ago. The total federal expenditure is estimated at Rs 14,461 billion, current expenditure Rs 13,320 plus development expenditure 1,140 rupees. The current expenditure accounts for 92.10% of the total estimated expenditures, which is a substantial growth. The defense budget is estimated at Rs 1,804 billion, which is almost 13.67% higher than the revised figures of Rs 1,587 billion last year. Federal government will decrease subsidies by Rs 29 billion to Rs 1,074 billion from Rs 1,103 billion in revised estimates of last year's budget. Provincial share in the NFC award is estimated at Rs 5,276 billion, which is 57.30% of the fiber's revenue collection. The size of the total PSDP is estimated at Rs 2,709 billion, which includes a federal PSDP of Rs 950 billion, a public-private partnership worth Rs 200 billion, and provincial PSDP estimated at Rs 1,559 billion in this budget. Moreover, the federal government has projected a Rs 9,200 billion worth tax revenue target in this budget, almost a 28.0% growth from the current fiscal year's revised figures of Rs 7,200 billion. The projected GDP growth is 3.5%, and inflation is projected at 21.0% during this year. Factoring in the same, the fiber's projected tax revenues growth of 28.0% seems achievable. However, the fiber will need to enact Rs 236 billion worth of additional tax revenue measures. However, in my view, the government may be able to collect 9,200 billion Pakistani rupees worth of target should tax measures be enforced effectively. Pakistan has an excellent potential to enhance its tax revenue collection and can easily finance its debts and deficits. Budget at a glance 2023-24. Total revenue. During July to March fiscal year 2023, total revenue grew by 18.1% to 6,938.2 billion Pakistani rupees, driven by a significant increase of 16.5% in tax collection. Non-tax revenues also rose by 25.5% to 1,320.5 billion Pakistani rupees during the same period. Total expenditure. From July to March fiscal year 2023, total expenditure rose significantly to 10,016.9 billion Pakistani rupees, compared to 8,439.8 billion Pakistani rupees in the previous year. Markup payments experienced a remarkable increase of 69.1% during this period. Current expenditures accounted for 70.2% of the total, while development expenditures represented 29.8%. Development expenditure from July to March of fiscal year 2023 reached 1060.4 billion Pakistani rupees, compared to 1051.1 billion Pakistani rupees in the previous year. Non-markup expenditures grew by 7.7% during the same period, in contrast to a significant increase of 32.1% in the previous year. Now let's discuss the projected economic indicators for 2023-24 defined in the budget. The real GDP growth is 0.29%. The inflation CPI is 28.2%. The debt to GDP ratio is 70%. The policy rate is 21%. Now let's discuss some important changes made in taxation. The size of the annual development program is fixed at 1,150 billion Pakistani rupees, which includes PSDP amounting to 950 billion Pakistani rupees and net lending amounting to 190 billion Pakistani rupees. IT sector recognized as SME, limit enhanced from 250 million Pakistani rupees to 800 M. Exemption of customs duty on import of raw material for batteries, solar panels, and inverters. Duty-free IT-related imports up to 1% of export proceeds. A progressive super tax regime has been introduced in the range of 1 to 10%, previously it was capped at 4%. GST raised on Tier 1 retailers of leather and textile from 12% to 15%. Withholding tax on overseas payments made through debit/credit cards is raised to 0.5% for filers/non-filers from 1%. Minimum turnover tax reduced from 1.25 to 1% for PSX-listed firms. A 0.6% tax has been imposed on cash withdrawals by non-ATL. The Dasu hydropower project has been allocated a maximum of 58.59 billion Pakistani rupees. 17 billion Pakistani rupees has been allocated for the Karachi Greater Water Supply Scheme. 14.86 billion Pakistani rupees has been allocated for the Karachi Coastal Power Project. 16 billion Pakistani rupees will be spent on the Pakistan-Tajikistan transmission line. For the rehabilitation of flood-affected areas, 6 billion Pakistani rupees has been earmarked. 5.70 billion Pakistani rupees has been allocated for the Hyderabad-Sukur motorway project and 5 billion Pakistani rupees for the new Gwadar International Airport. 107 billion Pakistani rupees has been allocated to the Ministry of Water Resources. The Higher Education Commission is set to get 59.71 billion Pakistani rupees. Reimposition of 10% final withholding tax on issuance of bonus shares by a company. 50% tax on unexpected earnings arising from exchange gain. 50% reductions in tax liability for 3 years for youth entrepreneurship, maximum limit of 2 million Pakistani rupees for individuals/op and 5 million Pakistani rupees for a company. Imposition of additional tax at the rate not exceeding 50% on income, profit and gains of a person or class of persons on account of extraordinary gains due to exogenous factors. Increase in Benazir Income Support Program allocation from 400 billion Pakistani rupees to 450 billion Pakistani rupees. Salaries of government employees increased by 35% and 30% for grades 1 to 16 and grades 17 to 22 to improve their purchasing power. Upward revision in pensions and increase in minimum pension to 12,000 Pakistani rupees. Super tax under Section 4C is required to be discharged through quarterly advance tax. Further, 3 new slabs for levy of super tax on taxable income exceeding 350 million rupees are introduced with super tax rates from 6% to 10%. Tax incentive for 30 years is provided to the Recodic project, being a qualified investment under the Foreign Investment, Promotion and Protection Act of 2022. Tax credit for the construction of the new residential house, amounting to 1 million rupees or 10% of the amount of tax assessed, whichever is lower, is introduced subject to certain conditions. Reduction in tax liability of a builder by 10% or 5 million rupees, whichever is lower, is introduced. The scope of the term associates under Section 85 is extended to cover persons having a sufficient influence on other persons for economic and financial dependence. Additional tax is to be levied on any income, profit, or gains arising due to economic factors to be notified by the government for the preceding 5 years from tax year 2023 and onwards. Such additional tax will also be applicable for entities covered under 4th, 5th and 7th schedules to the ordinance. No explanation will be sought under Section 111 for inward foreign exchange remittance up to $100,000 or rupee equivalent, as compared to the current limit of 5 million rupees. Commissioner Inland Revenue is empowered to collect non-tax revenues under other laws. Automatic issuance of exemption certificate through IRIS introduced, where the Commissioner of Inland Revenue does not process the exemption application for payments to non-residents within 30 days of filing the application. Sales tax return filing requirement withdrawn for availing final tax regime for exporters of software, IT services, and IT-enabled services, certified by the Pakistan Software Export Board. The business turnover threshold for small and medium enterprises, SMEs, enhanced from 250 million rupees to 800 million. Category 3 SMEs, having turnover above Rs. 250 million but not exceeding 800 million rupees introduced. Depending on the option elected by such SMEs, these SMEs will be subject to tax at 20% of taxable income under the normal tax regime and 0.75% of gross turnover under the final tax regime. International Center of Tax Excellence to be established by FIBER, which intends to develop national tax policy, research in tax administration, international tax cooperation, workshop, seminars, and conferences for knowledge and upgradation of tax officials. An adjustable advance tax of 200,000 rupees introduced on the renewal of a domestic aid visa to any foreign national working in Pakistan. Advance tax on the purchase or transfer of property will not apply to the non-resident individuals holding POC, NICIP, and CNIC, acquiring property through foreign currency value account or NRV rupee value account. Tax under Section 113 minimum tax is reduced from 1.25% to 1% for companies listed on the stock exchange, excluding listed companies that are already subject to specified reduced minimum tax rates. The rate of tax to be collected under Section 148 for commercial importers of finished goods is enhanced from 5.5% to 6%. The withholding tax rate under Section 152(2)(a) for payment to non-residents on the sale of goods has been increased from 4% to 5% in the case of a company and from 4.5% to 5.5% in the case of other than companies. The withholding tax rate under Section 152(2)(a) for payment to non-residents on the rendering of services has been increased from 8% to 9% in the case of a company and from 10% to 11% in the case of other than companies. The withholding tax rate under Section 152(2)(a) for payment to non-residents against contracts has been increased from 10% to 11% for sportspersons and from 7% to 8% in the case of others. The withholding tax rate under Section 153 for payment to residents on the sale of goods has been increased from 4% to 5% in the case of a company and from 4.5% to 5.5% in the case of other than companies. The withholding tax rate under Section 153 for payment to residents on the rendering services has been increased from 8% to 9% in the case of a company and from 10% to 11% in the case of other than companies. Tax under Section 153 for payment to residents on the rendering of specified services has been increased from 3% to 4%. No change in the withholding tax rate of 1.5% for print and electronic media. The withholding tax rate under Section 153 for payment to residents on contracts has been increased from 10% to 11% in the case of a sportsperson and from 7% to 8% in the case of others. The adjustable advance tax rate is increased from 1% to 5% on payments to non-residents through debit/credit or prepaid cards. Reduction in tax liability to 50% for 3 years for youth entrepreneurship is introduced with a maximum limit of 2 million rupees for individuals, up and 5 million rupees for a company. Youth is defined as a natural person up to the age of 30 years. A reduced rate of tax of 20% is introduced for banking companies and respective income from advances for information technology services and information technology enabled services. Income of the Export-Import Bank of Pakistan, Film, and Drama Finance Fund, and certain other entities are exempted from tax. Profits and gains of an SME set up as an agro-based industry in rural areas are exempted for a period of 5 years from the tax year 2024 to 2028. The time limit for the exemption on any income of any individual domiciled or company and association of persons resident in the tribal area forming part of the provinces of KPK and Balochistan is extended till June 30, 2024. This is all for today's video. I will discuss the more detail in second part. If you like my video, please subscribe and like the button. Thank you for watching.